With our next presentation, which is going to be the cycle of greed and fear when trading Forex. And from Alpari, I'd like to welcome up Weiland Arlt. Would you like to come up to the stage? Thank you so much.
Yes, quite spontaneous. Usually I thought about, well, my speech is in 1 hour, but now I'm here and I'm happy to see you. Actually, I'm more than happy to see you all because this is my very first speech after 2 years of pandemic back on stage. And I'm so excited to see you all here in Dubai. And the idea why I like to talk about greed and fear is pretty obvious. Who of you has seen the Lamborghini outside? Who has seen it? Show me hands. Yeah. What do you think about the Lamborghini? You want to have it? Yes, you want to have it. Who doesn't want to have the Lamborghini? Do you need it for like driving from one side of the city to the other one? Yeah? Or do you need it because you want to look good in it? You never know. So, and that's the idea behind greed and fear. It's not that we are greedy when we want a nice car, but it's about the emotions I like to talk about. And of course, there's a disclaimer. When we talk about trading, there's always a risk. You know this, risk of losing money. And please be aware, take care of your position size, and please manage your risk. Why am I talking about this? Because I have written books about risk and money management. My name is Weiland Arlt. I'm from Germany. And again, I'm happy to be here. I'm the president of the International Federation of Technical Analysts. I'm a traveler, I'm an author, and I not have written just books in Germany, which are best-selling. I also have written one in English. You can buy this on Amazon if you want. And it's exactly about risk and money management, so what you need to apply in order to survive trading and really to make money is the most important point. So why is it important for us to talk about greed and fear? Because it's human behavior. We are humans. You are human, me. The only humans, or the only persons in this room or in this hall which are not humans are the robots running around. And they can dance, but they can't trade. We can trade. Sometimes we can dance. But what we have as humans are emotions, and we act emotionally. So why did I ask you about the Lamborghini? Why did I ask you about the nice car? Because why do nice things exist? Not because we need them, it's because we want them. And there are studies. And studies say that we make our decisions upon emotions. We think like it's rational behavior, but of course it's not. It's irrational behavior, it's emotional behavior. We have first the emotion, and then we act. You see a nice car, you feel like, yeah, I look good in it, and I really want this car because it's so nice. And then you make a decision and say, oh, well, yes, of course. I can drive in it as well, from A to B, from one side of the city to the other side. And this is what we do with every decision. If you want to buy something, if you think about food, or if you think about trading. And that's what it is when it comes to human behavior. And the question is, how do we behave in trading? Let's see what happens if we open a position. So if we like to, well, open a trade. So what happens usually? Let's assume you're an investor, and this is a usual cycle. When do people buy? They buy when they hear something. Hey, you have to get into this. Oh, gold is rising. You have to jump in. Oh, you ever heard of Bitcoin? Go into it. But when do you buy? Do you buy like at the top? Or do you like to buy at the bottom? When is greed and when is fear? Usually, people buy at the top, and they do and repeat this all over again. Who of you have ever experienced this, that he bought or she bought the top? Who made the last price before the reversal? Whoever did this, ever experienced it? Yeah, how does it feel? Really bad, right? Exactly. So you bought at the top, and after that, prices go down. How do you feel? Oh, take this away from me. I don't want to see it, you know? So what happens is that you're stuck in this position, and you can't stand it. And when do you sell? Right at the bottom, right? And what happens afterwards? Prices go up again, but without you, right? So we all have experiences, and this is because of our human behavior, because of our emotions, because we have emotions, and these emotions are about to kick in whenever we hear something excited. And there are two emotions which are very, very important for us. Again, it's greed, coming from that one. Who knows about FOMO? What does it mean? Fear of missing out. Whoever felt this? Hands up. We all did. Oh, I have to get into the position. Maybe I don't want to miss something. I want to get into this big profit. Oh, there is this cryptocurrency. It just got 500% the last hour. I got to get into this. So you jump just right in, just to get the last price at the top and to see that you're the last person who bought at a very high price. And then all of a sudden, when the price drops, the next emotion comes into place. And you feel like, how could this ever happen to me? And we are talking about FUD, F-U-D. It's fear, uncertainty, doubt. It's a counterpart of fear of missing out. So it's fear of losing something. And you get uncertain about your position because you enter right at the top. You thought it was a good idea. All of a sudden, it looks like it's not. So you get uncertain and you really don't know, okay, what can I do now? What to do now with my position? And of course, we all know this, not just in trading, in many aspects of life, you know? That's what sales are for example. Or that's why we have some special expo offers somewhere. Because if you don't order now, you don't get the good price. It's the same story. So what happens if we buy or if we sell? What happens with us in this cycle of fear of missing out versus fear, uncertainty, and doubt? Let's see. So it all starts with optimism, right? And then we have a belief. We feel like, yeah, it's got to be going up, of course. There's a thrill, right? I'm in 100% to the moon. No doubt about it. Euphoria kicks in. This means everybody is getting euphoric. Everybody's talking about. You gotta get into Bitcoin now. Remember? And what happens then? Prices go down. There's complacency. Oh well, just a correction. It's not a big deal for me. I can cope this, no worries. Then we have anxiety. Not so sure about it. But I'm into it, I hold. And then there's denial. Nah, this can't be possible. I read so many positive things about this asset. I stay within. And then there's panic. How could this ever happen? How can I tell my wife or husband? What will they say? And after panic, somehow there's capitulation. Okay, I can't see it anymore. I have to get out of this position no matter what. Okay, yes, I take the loss right now. And it's discouragement. And after you get rid of your position, what happens? How did you feel then? Some kind of relief, right? It's incredible. You lose money, but still you're relieved. Huh? Yes, that's what happens. And the very bad thing is that after you've done it, and then I experienced it myself, of course I did, there's disbelief. Really? Prices are rising again? Nah, this can't be true. No, this is really, that's not the basis. Game is over. I can't believe it. It's disbelief. And then there's hope. Oh, maybe prices go up again, really? Maybe I jump just right in. And then you see it's belief and optimism again. And this is a cycle which goes over and over and over again. It's human behavior. So these are the areas. Green is like, okay, this is the buy zone, and red is the danger zone. You know? So you don't wanna go into it in euphoria. Even though it feels like you have to be into it, you don't want to. And you don't want to sell into panic. You want to buy into panic because actually it's pretty easy trading and to be successful in trading. So we have two stages in market behavior. We have the peak, which is the point of the maximum financial risk. And we have the point of maximum financial opportunity. So ask yourself, where would you rather buy? So the formula for successful investment is very, very simple for us. It's buy low, sell high. This is what professionals do, by the way. Amateurs, the usual private investor, does it vice versa. Buys high because of FOMO and sells low because of FUD. And you don't want to do this, right? Nobody wants, but we have to be aware of our behavior. So the question is, how can we avoid this? And what is behind this? When is the best time to buy? I have 3 stages of a trend, and maybe you're familiar with the Dow theory and the stages, the phases of a trend. And maybe you remember this chart. It's Bitcoin, back in 2017. Good old times, huh? Yes, I know. So who has been in there? The complete journey from the accumulation phase, phase 1, where the pros buy, people with deep pockets, the insiders get into position. They have time, they have money, they have portfolio, and they can afford to wait for things to develop and to unfold. And the way things unfold and a trend develops is the moment where public participation comes in, where you and me, people who try to inform themselves, who are, let's say, pro or semi-pro, who are trend followers, who come in the market because we see, hey, there's something going on. But it's an early stage. And as prices rise, you see media write about it, you see YouTube exploding and videos about this certain asset. Actually, I made this presentation also in German, and I had a picture from a newspaper over there, and it was 3 days before the top. And it says, Bitcoin, do I have to be in? No words needed. 3 days later, we were at 20,000, and the rest is history. So we have the excess zone, distribution. So the question is, who sells to whom? Of course, distribution is where everybody gets in. Hey, you have to be in now. You want to be rich? Get in now. So who buys from whom? Of course, the broad public, everybody outside, buys from the people who bought before, you know? So the maximum opportunity zone and the maximum risk zone. And of course, if there's no one left to buy, prices just can't drop. And this is what happened. And as prices drop, FUD kicks in, fear, uncertainty, doubt. Oh, is this a scam? Is crypto really that good? Or whatever asset? Is it overvalued? Have I bought too late? Yes. So what am I doing? So, and this repeats itself. This is Bitcoin today. See here? That's 2017. And see now? It's the same. It's the same old story. We have accumulation, we have public participation, and we have excess, FOMO, distribution. Everybody wants to be in. $60,000, $65,000 for Bitcoin. Go! At the end of the day, losers, losses, FUD. And that is repeating all over again. So ask yourself, at which point you would like to buy? Maximum risk or maximum opportunity? For me, the decision is clear. So how to overcome this? Of course, act professionally. So let's take this chart from Bitcoin. And you see, there are two zones. So if you tend to jump in because everybody is talking about, everybody says, you gotta get into this asset. What do you say? No. Why? Because you're on the top. Because when everybody is talking about it, everybody is involved. Everybody is invested. Because that's why they talk about. Because they want prices to rise. But if everybody is talking about, everybody is in. There are no more buyers left. And you don't want to be the last one. I'm pretty sure, right? So what do you wait for when you hear something like, yeah, you got to buy, you got to be in now? It's better to wait for something like a correction, like a pullback. You wait until the price comes down to the point of maximum financial opportunity. And of course, you need to have the skills of technical analysis. It's important to see where the trend, where are support zones, where are resistances, where you really want to, where you want to buy and where you want to sell. So apply technical analysis. Apply risk management. Take care of your risk management. That means that right here we have candlesticks. Use candlesticks. Use support. If the support is broken, if the trend is broken, get out. You can enter again when it's cheaper. Or secure your position. Hedge yourself. Don't get trapped into fear, uncertainty, and doubt. And don't let yourself soak into a market or an asset because everybody is talking about. Don't be the victim of your own emotion. So again, ask yourself where you want to buy. And this is the conclusion. The concept of a trend and the break of a trend helps us to get the right timing with our own investment decisions. And of course, we need strict risk management to avoid this trap and to avoid to step into or stumble about our own emotions. And third, and this is most important, proper self-management. Sit on your hands. Wait for the right time to enter a market. Don't get trapped. Again, ask yourself, you want to be the buyer in the zone of maximum risk, or you want to be the buyer in the zone of maximum opportunity? I'm happy to be here together with you, and thanks for visiting us on Forex Expo here in Dubai in this year. Hope to see you next year. And of course, I'm open for questions at the booth of Alpari. Thank you.